Hello, Jim here. It's Sunday and we've had some unrest in the Middle East. Israel's been attacked. So there's no telling how the markets are going to react. It may be a big down day tomorrow. We may be at the beginning of a bear market. So today I want to share with you what steps I'm taking to prepare for the possibility that we do go into a massive dive. So I'm going to talk about the planning I make. I'm also going to share some information about some of my trades and just in general how I'm protecting myself. So stay tuned. I think you're really going to enjoy what I have for you. Let's jump right in. I've created some bullet points just to keep it easy and be sure I don't forget anything. So starting out, I like to do safer trades during bear markets or market downturns. And I've mentioned this in the past. I start with a cash secured put in a market that's not downtrending or, where we're looking at a potential correction. I will typically just purchase the put if it's inexpensive. A lot of times I will do cash secured puts. But when it's kind of a rough market, I encourage always, purchase that put if you can. Also purchase a put if you own a lot of shares, like with me with Coca-Cola. I might look at buying some puts to protect me with Coca-Cola. That way, say I pick a $50 put and I buy 10 contracts, I'm protected at that level. If it goes below 50, I can put those shares to someone and I'm protected if it goes, way below 50. And the same idea with a vertical put credit spread. So by buying the put, you turn it into a vertical put credit spread. So you're only at risk the amount of the spread minus whatever premium you bring in. So it protects you by minimizing your losses. And even if you get assigned early, you potentially could put those shares to someone else if the put is also in the money. If it's not in the money, a lot of times I find the put is worth a lot and I can sell the put, lowering my cost basis. So to start out, it's just a good practice to do that. For new people, let me just do a quick example. Say you're looking at a company that you want to own, say it's Shopify, and you sell a put at 65 and it brings in $200. Well, while you're on the option chain, I like to go $10 out, but look at the $55 put. What does that cost you? If it's really expensive, like $1.50, and you're only going to make $50 on the spread, to me, that's not worth it. But a lot of times you'll find it's fairly inexpensive. It may be $40 or $50, and suddenly you can make $150 per contract, which is still a really good return, and it's providing protection, just in case the market crashes and, blows through not just the put you sold, but also the put you purchased. So another important point, and I reference this in every video, picking good companies at good prices. I typically stay away from the high flyers. I don't, at the level that NVIDIA is and the level Meta is, I don't trade in those. I typically find companies that I believe are great companies at great prices. And, especially when we go into a bear market and the market dives, there's going to be even more. You might be able to pick up some really good companies for cheap. So just keep that kind of in mind. It makes it so much easier and less fearful if you're picking companies you want to own. And of course, have enough cash to, if you do get assigned, that you're not putting your account at risk. That's why it's called a covered call. You own the shares, or a cash secured put. You have enough cash to cover that. And I encourage you to even do that with vertical put credit spreads. Have enough cash to own those shares. I typically have plenty of cash to own the shares. I just like to protect myself on the downside. And still, if you don't end up owning the shares and you still get a really good return, you're still going to be doing really well. Though, if you just to give you an example, the same example I just mentioned, if you sold a 65 Shopify put and you brought in 200 and then you paid 50, you brought in $150, and let's just say it's a $10 spread. That's almost like a 15% return. And if it's only a month out, you potentially are making like 120% return for the whole year. And if you're picking it up at a really cheap price, so much the better, because you own it now, and if you want to sell calls on it, the calls are going to be really profitable too. Or if you just want to hold that stock indefinitely, it may be a much more expensive stock. It may appreciate through the roof, just kind of like NVIDIA. If I've owned some NVIDIA, and I believe it's an $1,800 return or 1,800% return since the first time I picked up those shares, which I think was 4 or 5 years ago. And then next is what we like to talk about in software development is keep it simple, stupid, KISS. And so many times people make it so difficult. And I've had a lot of members do this, and I've even had some subscribers contact me, especially when the market is downtrodden and we're going through some rough times. Don't be doing really complex trades. Try to keep it as simple as you can. Do the safest strategies. And by far the safest strategies are the covered call, the cash secured put, the vertical put credit spreads, depending on the stock, iron condor. And also, I think the poor man's covered call can be fairly safe as long as you're picking the right stock. And then next, and I'm still working on this, I'm working on coming up with a ranking for my trades, but you can typically identify when you have a really good trade. And in those instances, maybe it does make sense to take a little bit more risk, and maybe instead of doing 2 contracts, do 4. I don't think you should blow it up. Some of the other YouTubers will say, well, do 30 contracts. You don't want to be doing that on a down market, especially if some companies get into trouble or the banking sector gets into trouble. You may end up losing a lot in a very short period of time. And then next, this comes from Warren Buffett: be greedy when others are fearful. And it is so true. So if we do get a correction coming up this week, and, say the only instance I think that it could happen is if Israel strikes out at Iran, and then suddenly other countries get involved, and then the price of oil goes through the roof. But I don't know. It's, from what I've seen so far today, it doesn't seem like they did much damage with the attack against Israel. But, I don't know what's going to happen later this day and going into tomorrow. I do believe Israel will do something, so we really won't know until, the middle of the trading day. And then finally, what I like to do is I share with my membership what I call planning worksheets. So I'm going to take you through my planning worksheet. And for this one, I don't have much expiring. I typically would go 3 weeks out, and anything expiring in any of my accounts, I would put in this planning worksheet. And I would identify the ones that are at risk, the ones that are in the money. And then I typically plan, well, how do I want to handle these? Has anything changed with the company? Do I no longer want to own them? Like one example that you'll see here in a minute is Walgreens. Do I still want to own Walgreens? It's just been hammered majorly over the last 2 years. So before we jump into that, I have some memberships, a couple different levels. I do some hand-holding and coaching. And then I share my trades. I share all my different spreadsheets. I have special collections that talk about how to get started and all sorts of stuff. So you might be interested, take a look below. And as always, please subscribe and hit that like button. I want people to understand that this should be another tool in your tool set. Selling options is unbelievable with the amount of income it can generate. So let's jump into the next part of the video. Okay, here's my planning worksheet. I shared this with my community or my membership this morning, I believe around 11:30. And I typically will put on this any positions that will be expiring over the coming 3 to 4 weeks. Now, I only have 2. The 2 at the top are the last 2 that I have expiring next Friday. Everything else, I think the next group will be May 17th. I prefer monthly expirations. So the third Friday of any month, I typically have a lot of positions expiring. But this month I did it a little bit different. What I decided to do is identify all my positions, especially my puts. I have not listed all my calls that might be in the money. I'm less worried about them, more worried about my any puts that may be in the money. And I've listed them here. I've color coded them. I put in when I initiated the trade, and then I also put in all the premium that I brought from each trade. And we'll just run through this. XLU currently is not in the money. These first two were ones that were already there. SDY is the only covered call that's on here. It did come down. If we have a market correction, this may not be in the money anymore. And this one I've been trying to get rid of, and it just doesn't get assigned away from me. So you do have instances where you have positions and they just never get called away. So this will get called away from me if it's in the money on 419. I want to switch and use a different ETF instead of SDY. I prefer SCHD or maybe even DVY. So that's something I'm looking at. So next is what I mentioned earlier is Walgreens. Walgreens has just been hammered. I have been running, I think I've rolled this trade 2, maybe 3 times. It's in my Schwab account, so I can use this as a hedge against my gains, like a tax loss hedge. And I've done that before because I have a lot of gains. So I typically have 1 or 2 companies that end up being dogs. Last year, I think it was Lumen and Big Lots. This time it may be Walgreens. They did hire a new CEO, and there's some stuff going on, so they could recover. But the current price right now is $17.85. Now I don't know in futures; it may have dropped even more. It's not expiring till 6/21, but it's pretty deep in the money. I typically like to teach that if you're more than 10% in the money, so this is 22.50. 10% is what, $2.25. So if I take $2.25 away, I'm very deep in the money. I'm probably closer to 20% deep in the money. So this could get assigned to me. I may wake up in the morning and it's been assigned to me. I brought in for premium 236. So if it is assigned to me, it's going to be pretty close to 21. And then depending on what happens with Walgreens, if it gets assigned, I can always sell the shares at that time, as well as potentially sell the put for a bit of a profit too. But I'm just going to keep an eye on it, decide, look to see if there's anything else I want to do. I did look at Seeking Alpha to see what they were saying. They did talk about the new CEO, again, is doing a better job. And it looks like they may turn things around late this year, but probably still a rough 2 or 3 more quarters. Next is ACLS. This is a chip maker. This has gone in and out of the money. I believe I rolled it down. That's why it's a $20 spread. So a lot of times if I'm trying to roll something down, I'm not 100% sure I still want to own them, then I will widen the spread so I can lower the short, because what's key is the short. So the 110, and you can see here, it dropped to 104, and it's been steadily dropping for a while, but it's got good profitability. It's got little debt. So I'm kind of hedging to think I might keep it. And I brought in almost $700, almost $800. So if this is assigned to me, it would be pretty close to this 104, 105, which I believe is fairly close to a 52-week low. They make chips related to EVs, and I do think EVs, I think they're still going to be a big deal. They came out of favor because I believe, Ford and GM and some of the others, the pricing they put on them was just way too high. Most people can't afford $100,000 for a vehicle. Next is IYR. This is one of I believe this is the real estate ETF, and it's slightly in the money. So it's 20 cents in the money, but this is one I would never have made the trade if I didn't want to own it. So if it gets assigned to me, that's great. And I'll probably look to own more. I don't currently own any of it. I have other ETFs that are similar, but I don't own that one. So, and then next is Path, and you can see this is a lighter yellow, kind of almost orange, and it's barely in the money. Its current price was $20.71, so it's maybe 29 cents in the money. And this is another scenario where I'm perfectly fine with owning them, and I've already brought in a lot of premium, almost $800 in premium. So if it gets assigned to me, I'll own it for like $19, and it has really good covered call premium. So again, that's why if you pick these companies at great prices, and it's not a big deal, fear factor is way down. Surge is one that's a little bit more complex. What happened is they're a fintech company. They offer internet service and cell phone service, but they provide it to the rural communities and people who are low income. And it uses a bill that Congress, I think it's called the Connectivity Program, ACP, I believe that's what it's called. And it was supposed to get in the bill last time, and it did not get in last time or last month's bill. But there are a lot of senators and reps that are still wanting to bring it in. But I think even without that program, they might do pretty well. But if that program does get passed, and right now I believe there's a Democrat senator who's trying to force it to the floor, which, who knows, next week it might get approved and this could rocket back up. But it's not a lot of money. You're talking only $1,500. And I think I brought in 258. So if it gets assigned to me, it would really be, what would that be, like 625 is what it would be assigned to me at. But this isn't what I'm recommending to people. This is, until things get cleared up related to the ACP, I would stay away from it. This is Tapestry. This is a trade I literally did, I think, not last week, but maybe the week before. I can't remember if it was last week or the week before. And 42, 50, 35. It's a retailer. They own Coach. They own some really high-end retail outlets. Currently, they're 41. They were, I believe, Friday. They did go into the money, so they're slightly in the money. Again, that's why it's light orange. And I brought in 245 with them, and they pay a good dividend. It's a company I've been keeping an eye on, and I don't mind owning them. Same thing with Twillo. Barely in the money. You're talking less than $1, maybe 97 cents or something in the money. So this could jump out of the money if the market turns around, or it could go a little deeper in the money. I'm not as impressed with them as some of the other companies, but I do like them to a certain degree, but I'm not 100% sure that I want any more shares than 100 shares. That's why I only have one contract with this, but it did bring in some good premium. Like a lot of the other technical companies that are trying to use AI, they typically have very good premium. So 338 for one contract, and it's a cash secured put. So this is an instance. Same thing with Surge. Any of these cash secured puts going forward, I would probably do as a vertical put credit spread. So I probably would have looked at a 5250 and purchased the put at that level. And I probably would not have brought in 338, but I might have brought in 250 if you get my drift. Same here, another cash secured put. This is Zoom. So Zoom is probably, I've done more trades on Zoom. I own 100 shares now. This is another 100 shares I want to own. So I just placed this trade because I want to own another 100 shares. And hopefully on May 3rd, which is 3 weeks, I guess, 3 weeks out, hopefully it'll get assigned to me. It's currently 61.63, and I brought in 228 on that trade. So in this instance, should you buy the put? Well, I really want to own them. So in this case, maybe not. And you'll see partially why is because I have another trade Zoom that's a little farther out at 65.55, a little bit deeper in the money. Some really good premium, even though it's a vertical put credit spread with a $10 spread, still brought in some really good premium. And now with it right around 61, 63, it was money. It was kind of like a money generator when it gets to around 60, 61, especially if you can sell, a 55.45. It typically hits 60 and then bounces back up. Now it may be different during a correction, but I've had, like I said, lots of success with Zoom. Done lots of trades with it. It has a low PE. It has good profitability. Has no debt, and it's well run. It's just Wall Street doesn't really like them, which is okay, because if it stays around this range, it really is a great way to make extra income. Now CVS it took a dive just like Walgreens. So these pharmaceutical companies, I believe something came out related to Medicare and reimbursement, and I think they did not increase reimbursement. But I like CVS. In a way, I also like Walgreens, but I'll have to make that decision. If I end up owning Walgreens, I can make that decision at the end of the year if I want to take a loss against other gains. But I believe CVS is near its 52-week low. So if it drops any more and you can pick it up at 65, it's like a steal. I think at that point you probably have close to a 5% dividend. And it typically also has fairly good option premium for a big company. And it doesn't have a lot of debt. I have one right next to me. So here you can see I brought in 325 in premium so far. But I go to CVS all the time. You pay a little bit more for stuff, but sometimes the convenience, at least for me, having it right next door. If I'm going to play tennis, I'll stop and pick up a water or two or a Gatorade or two. I just like CVS. I think it's really been hurt. Both CVS and Walgreens have really been hurt by the rise in crime and this, certain places allowing theft up to a certain amount. I just think that's ridiculous. Hopefully people come to their right mind and that kind of stuff stops. Now, Mara is kind of new for me. I don't know much about Bitcoin as a Bitcoin miner, so I'm still trying to figure this out. Now, it did go in the money, not even $1 in the money, and the reason I have it is a deeper yellow. I have 4 contracts in it. It's not expensive if it got assigned to me. Plus, I would probably have a lot of value in the 13 for Mara. Where I'm confused is, again, I don't know much about Bitcoin. And since they're a miner and they have this halving coming up, how do they make their profits going forward if the halving occurs and they're putting these big investments into these, mining warehouses? I'm still wrapping my hand around it. If you would leave a comment if you know a lot about it and could explain that a little bit better. But I wanted to try it, and it's given me a reason to try to dig deeper and learn more. And it has unbelievable options premium. So I brought in 402 for, what is that, a $4, for 1,200. I believe this is one of my highest, most profitable trades. And I looked at how much I could earn call-wise, and calls look almost as good. So if I do end up owning it, so it would be like $1 off per share. I'd own it at 16. I'd probably pick up a little bit of cash at 13 too. So I probably own it around 15, unless it drops down to something like 10 or below. I could potentially sell some really good covered call premium. I believe 12 or 13 is near its 52-week low. So, so this works out well for me. At the top of the spreadsheet, so this is the total where I stand going into this week. I've made 36.34 between all my accounts. I do have the ability to break it out now by different accounts, but as I make trades this week, what I do is I typically add them down here. If I make a trade with one of the ones up above, I'll usually note it as green, and then I'll update the information on the right on capital required, how much more premium I brought in. And as I make new trades, I'll add them down here. So at the end of the week, I have a spreadsheet that adds to the total up above and gives me what I need so I can do my monthly spreadsheets that show how I've done the whole month. So I wanted to talk about this. I wanted to, share with people. Try not to be too fearful if you do make trades this week and the market does dive, pick good companies at a good price, take less risk, and don't panic. It's sometimes these are the best opportunities to pick up some good companies. Now, of course, after saying all that, who knows? We may have an up day tomorrow, but I don't know. I'm beginning to think we probably will have a bit of a down day tomorrow. So thank you as always. If you want to add a comment or two or leave a comment, I typically try to answer them within 48 hours. And hope you have a wonderful rest of your weekend.